Yeah, right?
I'm not so big.
At least you're king of something, Mark.
I aspire to be the king of the little people.
Okay. Are you ready, Olivia?
I'm ready.
You ready? Are you sure? Okay, here we go. I'm ready. I got my notes right there. Okay. Hey, everybody. Welcome to another episode of Tatter Fact. And we're changing things up a little bit with this episode. I have brought on my really good friend, Mark Rizzo. Yeah.
Hello.
So, yeah. You're not our first boy. You're my second boy that
Oh,
we've
there was
had on
Chris,
the show.
right?
Yeah. Chris, yeah.
And then there was another gentleman too.
No, I think Chris was the only. Oh no, Art.
Art.
You're right.
There
You're
you
my
go.
third boy.
There you
Yeah.
go. Okay.
Yeah. So you've watched all the episodes
Mostly all of them.
because you kind of wanted to know, like,
Yeah, see what
what
I'm
am I
getting into.
getting into? I don't blame you. But you said you did say yes
It was
right
good
away.
though. I've learned microblading, all these new terms.
I know.
And, what's the ones with the shark fin or fins or something?
Oh, wings.
Wings.
Yeah, wings, shark fins. I like that.
You could create that. That's,
Yeah, right. We
that'll
should
be new.
trademark that, Olivia. Shark fins. But yeah, so you do know a little bit about PMU and of course what I do because you were my tax guy for about 10 years.
Mm-hmm.
And me and Kat. And what's so funny is actually how you and I met is before Kat and I got together, Kat and her ex-girlfriend were your clients.
Exactly.
Right.
Many years ago.
Yeah, many
we go way
years ago.
25 years back.
Yeah. And then Kat and I met and became an item. And she kept going to you and I kept going to my other guy. And I hated fucking taxes. It used to piss me off. I used to get in a bad mood every season. And it was just like, ugh, taxes. Like probably most people or a high percentage of people. And then my tax guy, he just got older and he retired. So Kat's like, just come see my guy Mark. It'd be easier if he's just doing the both of us anyway. I came. You did
Worked
my
out perfect.
taxes.
And we took you from here to there.
Yeah.
Just made it into a beautiful company.
Yeah.
But that's all the hard work that you two did, though.
Yeah.
So I just gave you a little push, and you just took it to the next level.
Yeah.
Works out
You
great.
gave me and Kat more than a push. You actually became a mentor to us. You became an inspiration to us. You know that. I think I've told you that many times over the years. Like, I just found you fascinating, Mark. First, I think the most fascinating thing about you is you love taxes. And I'm like, well, that's messed
You got to
up.
be. People called me giddy, where they like. I love talking about. I love bringing people in to clean them up from their mess. So many people have a mess.
Yeah.
And it's nice to clean them up, package them, and put a little ribbon on it, and send them on their way. And now they're making money, and everybody's back in action.
Right.
So-
And that's what I recognize you. It's not, it's you, it really makes you happy. You can see it all over your face. You smile, you light up when you talk about taxes and money and even IRS and audits and all that stuff. You love it.
Well, there's a finality to it when you get to the result. The end result is always a good thing.
Right.
You just do it right.
Well, we hope the end result is a good thing.
No, it is. You just got to play your cards right. You just got to just do everything properly.
Right.
Follow the law.
Yeah.
That's the main thing. People don't want to, everybody wants to, not everybody, but it's human nature, I believe, to try and to get by.
See what you can get away with.
See what you can get away with.
Right,
Yeah.
right.
And then I got to curb that and put everybody, set them straight.
Yeah. Well, I knew right away you were by the book guy. I knew I was never going to get into trouble with you. You're a rule follower. You did a lot of meetings or seminars or whatnot held by the IRS and
Constantly being educated.
On what the IRS is looking for.
From all my mentors who are very intelligent people.
Right.
Yeah, I learned so much. I was at a meeting the other day. The guy was fantastic.
Yeah.
Just all the new tax laws we're constantly updating.
Right.
Learning, and we're way ahead of the game because I have to know everything when someone calls.
Right.
Yeah,
because it's constantly changing, right?
Constantly, even more so now. It's accelerated.
Yeah.
There's so much to know.
Right.
And I don't even know how people can get into this business and do something because it's evolved even since the Tax Reform Act of 86 was 35 years ago.
Yeah.
So all that's been evolving, and now it's just bursting at the seams with all the new tax law.
Right.
It's a lot. How do you go back and educate someone on everything that happened 10 years ago and 20 years ago? It's got to be so hard to come in as a new preparer.
Yeah.
So, but they're doing it though. There's a lot of young people who are
getting into it.
Yeah. And it's mostly people with a financial brain, where they
you would
do
have
finance.
to have. It's like your mind has to work a certain way to do what you do. You know, is that left brain, right brain kind of thing?
Yeah, totally left brain for me.
Yeah. And I'm like totally right brain. I'm a creative. You know, I think I have a little bit of left brain in me with my OCD and being organized and, you know, whatnot.
But there's a good balance though. Like I used to be a musician, and back in the 70s and early 80s,
right,
which allowed me my right brain to grow a little bit.
Right.
So I think that actually pushes your left brain even, and it just accelerates your.
So do you believe everybody
power.
should be growing both sides of their brain? Like if you're born and you're really left brain, then you should play like a musical instrument.
Yeah, everybody should play a musical instrument. They should all do a sport, play sports.
Yeah.
And just get educated.
Yeah.
Because there's so much, because it all grows together. It all makes you the person that you are.
Yeah.
You know.
I played sports.
There you go. See? But that pushes you though.
Yeah, no, it did. And I think it teaches you camaraderie and teamwork and
competition too.
Competition, reward.
You compete against yourself.
Yeah.
That's what I do. I always competed against myself because I really had nobody my age to compete against. I got into this business pretty early when I was young.
Right.
And there was just a bunch of old farts, you know. And then now I'm one of them.
Right.
Now I'm the old guy.
Right.
You know.
Yeah.
But
what was I gonna say? So you're an entrepreneur. So do you want to kind of like tell my listeners a little bit about, you know, where you started and?
Started from zero. Started a poor boy from Buffalo.
Right. You were at the MGM though here in Vegas, right? You were
moved
a food
to Vegas.
server.
Yeah, I was a musician in Nashville, Tennessee. Moved out to LA. Didn't like it, so I moved to Vegas in '78, and just started working in the casinos. Dropped the music business. Got into accounting because I needed something to stabilize my life. I know that someday I'm going to retire, so I have to get ready for that.
Yeah.
And people don't think about that enough. Someday you will get old and you will have to have financial security.
Right. Yeah.
So
I'm gonna do you hear his flip flops in your ear thing? No, because I hear you. Yeah, I was gonna say get barefoot. Pretend you're in Hawaii.
There's a mouse.
I don't know if it's picking up on the mics or not. I mean, your feet are way down there, but I can like totally hear it. Are you nervous?
Apparently so.
Don't be nervous.
I'm being interviewed here.
Yeah. So,
I'm married to a Russian, though. I'm used to being interrogated.
I know, right? So. Yeah, you've been married to Yuli for 4 years. I mean, you were single for so long. Yeah, I know.
Many, many years, but it was fun.
Yeah. No, of course.
Life is good.
Life is good. So, so you were a food server at MGM, and like a lot of us do here in Vegas, you know, we go work for the casinos, we work for tips. You do get like 401k and you know, good salaries, you get your tips, you get your benefits, medical benefits. So working in the casinos here in Vegas is a good job. It can be an excellent career, but so musician, Nashville, food server, why taxes? What was it about taxes? Said, I'm going to go open up my own little tax firm and I'm going to be a tax guy.
It was all about tip income. For me, back in '84, they changed the law with all our tips. In 1980, the dealers went to the Supreme Court and they said that tips were taxable. The Supreme Court ruled it. The dealers thought that tips were not taxable. So all hell broke loose in Vegas back in the 80s, you know. And then in 1984, they made it so cocktail waitresses, food servers, bartenders, they all had to start paying tax on their tips.
Right. So
they said that they were going to give us an 8% allocation. So 8% of your gross salary or gross sales were taxed. So if you had 10 servers that had $1 million in sales for the certain restaurant, then there was $80,000 worth of tips that had to be allocated amongst 10 servers.
Right.
So everybody on our W-2s, we all got allocated $8,000. So then the IRS could start taxing our tips.
Yeah.
which I already claimed tips. So when I did my taxes, I already claimed like 10 grand that I made.
Right.
And then I got to pay another 8,000 of allocated tips, which means that I'm paying tax on 18,000, whereas all the people who didn't claim only paid tax on 8,000. Mm-hmm. So it wasn't right.
Right.
So I went to my accounting professor at community college, and I told him that here's $200. Please do my taxes. He said, I don't do taxes. And I said, so I want you to do my taxes. Keep the 200. It's a one W-2. And so he did my taxes, and he didn't add the $8,000 of allocated tips.
So you made a mistake.
I thought in when I went to him with the paperwork, and I said, excuse me, I know that I paid you and you could keep the money, but I think you made a mistake on my tax return. He says, no, allocated tips are not taxable. So that just, when I learned, and he said it's unconstitutional, every food server does not make 8,000. It
Right.
has to be real. You have to
Right.
have real numbers.
Yeah.
So that burst at the seams, and I started to do all the bartenders' taxes and the cocktail waitresses, all the servers.
While you were still food serving.
While I was
at
still a
the
food
gym.
server.
Okay.
Yeah, I brought a little briefcase into the Helps Hall.
I
and
can
would-
see you walking in there with your briefcase.
Yeah, I would do their taxes while they're eating lunch. I didn't need to eat lunch.
Right.
It keeps me
your
thin.
briefcase in one hand and your guitar case in the other hand. Right?
Yeah, just, it worked out great because I was saving people so much money.
Yeah.
But then they would claim the real tips, but they didn't have to claim the extra allocated tips.
Yeah.
Because that was like 2 tips you're paying on.
When I was
Double taxed.
when I was cocktailing for a period of time, it was just they really relied on us, right, to be honest with what we were making in tips. But by the time I got to Treasure Island, we were all given, cocktail waitresses were given like a little credit card per se, like a little ATM card, and you would have to go up to the bar, and before the bartender, like his serving would even work, the cocktail waitress had to insert their card, and it would log in how many pours.
Your sales, yeah.
Your sales. And depending on where you worked, so if you worked the pits, like the blackjack tables, the roulettes, I think you got charged, or they said you made like $1 a drink. But if you worked like certain slot areas, it was like you made 50 cents or 25 cents. So it was different like that. So that's how it ended up, like my last 4 or 5 years of cocktailing. It was, and you didn't have to claim any more than that. It was all
right. So now it's evolved to tip compliance. It's gone through those 5 levels of tip reporting. There's all different acronyms and names for it, but they finally got now where they actually pretty much got the people are paying tax on 100% of their tips.
Okay.
So now it's all out. It's all technology.
It's not like it used to be.
Not like it used to be.
No, those were the good old days.
But
Mike.
I always claimed all my tips because I wanted to buy a house and I wanted to show that I made income. To be successful, you have to make money.
Yes, and that's probably a common mistake people make, and they don't even realize how that can come in and bite you in the butt, right? Like you're not claiming all your tips, or us permanent makeup artists. I mean, a big percentage of probably what a lot of PMU artists get paid are paid in cash.
Cash, yeah.
And there's probably some people out there only claiming what's coming in a check or credit card, what's traceable. A lot do claim their cash. But those that are only not claiming their cash or not claiming enough, that can disqualify you from buying a home.
Yeah, when you do buy a house, you got to pay the PMI because you're
right.
You're more of a risk.
Right.
So you're showing high risk, so they charge you more. They charge you a higher interest rate. They charge you PMI fees.
Exactly.
Whereas if you show a good income, they let you go on a lot of that stuff.
Yeah. And that's one thing that you did for me is you completely changed my attitude towards taxes and paying in.
Yeah, you got to claim all your income, but claim all your expenses.
Yeah, well, right. And I was uneducated. Until I met you, I didn't have a tax guy. My first tax guy or my couple before you didn't talk to me the way you talked to me. They didn't educate me the way you educated me. They just, you just drop your stuff off to do your taxes, that's it. You were so different, Mark. You were so,
Yeah, I
so
like face
different.
to face and hands on and be able to talk.
Yeah.
And mold people to do the right thing and then become successful.
Yeah.
Right?
You know, and it's still not that we don't love taxes. I mean, I think the tax brackets are high. Everybody thinks taxes are high and all that. It's not that you love taxes, but do you want to spend the rest of your working life like being angry and bitter, you know, because you got to pay tax? I tend to look at it now. It's like, okay, my taxes, you know, they help you. The roads.
Taxes are a good thing because it shows that you're making money.
Right.
And you got to give the percentage, whatever. It's not the fair share. Whoever said we pay our fair share, I don't think it's fair.
Right.
I think we pay way too much.
I think every single person would agree with you.
But that's my opinion.
Yeah, I think that's everybody's opinion.
But to stay out of jail, you pay your taxes, you know, or get audits and your life becomes miserable.
Or I think if we could pick where our tax money went to, right, then maybe people would be a little bit more happy. I mean,
but the way that I did it was the taxes that I paid, I would go make extra money the next year, and I would motivate myself to make an extra $20,000,
right?
And then that would be the money I would use to pay the taxes,
right?
So I would earn extra money to cover the tax end of it. The problem is once you accelerate over 20 years and you made 20,000 more money, now your taxes become like 60,000 a year.
You're paying more taxes,
70,000,
yeah,
and then you get stuck where you're just like, shoot, now I got to perform at the top,
right?
And you don't have much leeway to not overperform,
right?
And put in all the hours. But if you love what you do, it doesn't matter anyway, because then you just work overtime.
Yeah, you know.
But then the assets start to earn money, like you started putting in money into rental properties.
Yes.
And you start making money doing, evolving your business to make other kinds of money from different aspects of the business. And then now you're making money without working.
Yeah.
So that's the whole idea, is to make money while you sleep.
Exactly, right?
And then there goes your tax problem now, because now that pays your taxes.
Right. That's what you know, like the girls here, Olivia, Ashley, I always say, you know, it's like, you know, if you get a little bonus, you get save it. Save it and get a house. I mean, get a house.
Yeah, and I figured out now, since the ultimate goal is to start a little business, have where you could write off your car, you could write off your computer. Right. Everybody should have a small business.
Right.
You could write off.
You've always said that.
Yeah, you should have
consulting. You would say a consulting business.
It's extra money, and it pays your taxes for you.
Right.
You make enough to pay that tax liability, and you're good to go.
Well, and I remember when I first met you, so, you know, we had all these interesting talks about taxes and why I should be happy I'm paying taxes. You know, if you're paying taxes, you're earning money.
You're successful.
You know, if you're paying more, you know, in 2 or 3 years, Teryn, if you owe more taxes because your income raised, that's the American dream. You want your income to keep going up and up and up. And
the problem is, though, people judge their tax guy by how much refund they get, which is totally it's not the way life is.
It's not the way, and you probably get a lot of grief, right?
A lot of people fire me because they didn't get a refund. It's like, it's not my fault.
Yeah, right. Well, numbers don't lie, and a good tax guy is not going to fudge the numbers. And you know, because I think a lot back, maybe not now. I think it's too hard to get away with it. But you know, back in the day, I think a lot of people kind of did that sort of stuff. You know, what can you move here or there?
But even though a lot of people didn't, and a lot of people are really successful, and a lot of people have a lot of money, more people than you think. There's a lot of money out there.
Yeah.
And my whole idea was to grasp like a big tray of straws.
Right.
So a glass of straws. I try and get as many straws as I can.
Yeah.
Because if I don't take them, someone else is going to take it.
Yeah.
So I would just grab as much as I could. And that's my money.
Yeah.
That's my little investment that I can invest in the future and all that.
Yeah.
So that's the way I looked at it, was I have to try and get as much as I can, because if I don't take it, someone else is going to get it.
Yeah.
So that's why you charge a nominal fee. You charge what your value is and also what you need.
Yeah. Do you have a lot of people trying to, like, okay, so here, you know, we charge a certain fee, like $500 for eyebrows, but they constantly want a deal. They constantly want to... You know, or if they refer us somebody, then they want a discount. Do you get that as a tax guy? A lot of people wanting discounts.
Yeah, I just give
fees.
them a higher quote, so then at least I'm going to get what I deserve.
So you give yourself negotiating room.
Yeah.
Is that what you do? Okay.
So I say $4.50 an hour.
Okay.
in my business.
Okay.
So a lot of people get turned away from that.
So that's lawyer fees. Well, that's high. Is that higher than lawyer fees?
My lawyer fees are way higher than what I charge.
Are they?
You know?
Yeah.
Some people pay, lawyers could be anything, $850 an hour. It could be $400 an hour.
I think Tiffany's a little bit more than that. Because you turned me on to Tiffany.
Yeah,
my
Tiffany
lawyer.
Charges $200 just to say hi.
Yes, I know she does.
I just don't even say anything.
I know she does.
No, it's good though, but she deserves it though.
She does deserve it.
She's
fantastic.
So smart.
She's fantastic. You turned me on to everybody's smart in my life that's helping me manage my finances. You turned me on to.
I met her at a meeting. She was a speaker, and she came in, and I was like, this lady's cool.
Yeah.
She knows a lot.
You turned me on to 3 amazing women.
And
Leanne, who's my bookkeeper.
Yeah,
so she's in...
Got the MBA from UNLV.
UNLV. She's in all my accounts. Of course, she's in my bank account, in my PayPal. She's in all my...
And she's honest.
She's honest, yeah. And but I was telling her the other day, because she might come on here. I was telling her the other day, that was a little hard for me. And not that I'm not like a mistrusting person. It's not that I mistrust her, but I think at first to allow someone in your accounts, it was a little weird. I had to get used to that, but it was the best thing because she just sees what's coming in, going out. She puts it all on a P&L and keeps, me and Kat like so organized. And then when we come see you, we're like, here you go, Mark. And you're a happy man.
No, honesty's how I got my start too. When I was a little boy, I remember they were all collecting money for something. We were going to rebuild the playground.
Right.
So we all took monies and we all added our monies and we built a whole new basketball court in the School 71 playground in Buffalo. And they wanted me to hold the money. And I was just a little kid, and they said, because you're honest.
Yeah.
So that's good. So my whole life, I've gone with honesty and education.
Yeah.
I
have too. Kat too. I think we have surrounded ourselves with people that are honest and ethical and whatnot.
So what's the other one? So you said
Leanne and Tiffany, who's our what do you call her? Estate planning, like she did our trust and
she does trust and estates, and she knows everything. And she's a
business lawyer too.
And she knows California law and Nevada law.
Yeah.
And that's what you want because people cross the border.
Yeah. So she set up this great trust, and got us all situated there. And then Sarah over at Merrill Lynch.
Yeah, well, she was from Tiffany.
Oh, she was from Tiffany? You didn't tell me about Sarah?
No.
Then Tiffany, but it was through you, kind of.
Yeah, kind of. Well, it all begats that. It's that thing where we're all 6 people.
Yeah.
What is that saying?
Well, the 6 degrees of Kevin
6
Bacon.
Degrees, yeah.
6 degrees of Mark.
We all know everybody, yeah. We're all related.
Yeah, but it's like, but that's what all business owners, I don't care how small, like, people watching this podcast, if you're brand new, starting out, seeing clients, and even if you're making a small income right now, now's the time when you are smaller to start putting the right people around you and getting organized. So as you grow, you're already organized instead of waiting until you're grown. You're making...
Then you have IRS problems because you didn't do things correctly.
You're making a good amount of money and maybe, you're not organized, you're not paying as...
Plus you invest wisely too. You get the good advice. And
and that's what Sarah at Merrill Lynch has done for us, because I don't know how to invest, Mark. And you've always told me, compound interest, you want your money making money. You really educated Kat and I on that. And I don't know how to do that.
It works, though. The system works.
Yeah. And I don't really have time. I'm out there making the money and bringing it in. And I don't know where to put it. Like, investing really made me really super nervous. I didn't really.
But you got to be willing to pay, like Tiffany, $200 just to say hi. I'm willing to pay that. I pay my attorneys. It doesn't matter what they charge me. Just like going to the doctor, whatever the doctor charges, I don't complain about my health insurance. I pay them because they're keeping me alive.
Yes, there was probably a point in my life, my business life, even where I wouldn't have. I didn't feel it was necessary or whatnot, but the last 10 years, of course, that's changed immensely. Now you nailed it 100%. It's worth it. Paying a good lawyer, paying a good finance person, paying a bookkeeper, and it's part of running a business.
Yeah, and becoming successful. You have to surround yourself with those people. Like
right. And delegating, right? Putting, having people, experts in their own field around you, so you can continue working and making money. But you do have to make sure that they're honest and they're ethical. Do you have any advice on how to find like a Mark Rizzo or a Leanne? How to like watching this, like they're like, okay, I got to go find a tax guy. I got to go. How do you know? Is there certain questions they should?
The enrolled agents, I'm an enrolled agent. We're called EAs.
So then that's one thing, right? Make sure there are an EA, enrolled agent.
It helps.
So is that
EAs,
some sort of certificate from?
EAs are the only federally licensed tax practitioners,
okay,
who specialize in taxation and also have unlimited rights to represent clients in audit before the IRS.
Okay.
So we do a lot.
Okay.
And we have to get, I've already got 30 credits in CE this year so far. The guy at the meeting the other day, he had 46. So we're constantly being educated on tax law.
Okay, so an EA.
So
make
EAs are
sure.
good. Or tax attorneys, CPAs, and EAs.
Okay, yeah.
But I like the EAs because I'm an EA.
You're an EA.
Yeah.
So you're not like an accountant per se, or?
Well, I could have took the CPA exam, but I already had a successful business, so I didn't have to sit for the CPA exam. But I sat for the EA exam, which was also 11 hours.
Right.
And I passed it, all 4 parts.
Yeah.
And I love tax, so I specialized in one thing.
Yeah.
And that's another thing that when I was younger, they said you have to, with the world getting so big, with all the population boom, you have to learn to specialize in one thing. And that's why I decided to go with tax.
Right.
So same with your business with, you got your eyebrows.
The shark fins.
The shark fins, yeah. Yeah, there you go. The new business.
Yeah, I mean, we tattoo the face.
It could be,
permanent makeup. Yeah.
Like well, that's what, in Hawaii, you'd be very popular.
I know. We have a lot of Hawaiian clients.
You have like Shark Woman.
You know.
The shark fins on the thighs and on the back.
Right.
Right, and then watch her swim into the ocean, but beware.
Yeah, well, Kat would be a mermaid.
Shark Woman swimming.
You know, Kat would be a mermaid. She's the mermaid type.
There you go.
Kat is. Yeah, I'd be a shark.
Well, you can put mermaid fins.
I know. The other thing that struck me about you is not just how happy you were about paying taxes and how healthy-minded you were about taxes, which helped me and changed me, made me a better person, I think, and smarter. Is, you know, right when we met you, you started also talking investment. You were like, are you investing your money? You're putting your extra savings. And I was like, well, yeah, you know, I think I was putting them in
buy a house.
I think I was putting my money in coffee cans at that point. Right. But I wasn't doing a lot of investing. I just had a regular bank account, you know, like most people. And right away, Mark, you pulled up your stock accounts and you were really open about how much money you made yearly as a tax guy. You showed Kat and I how much you had in your stocks.
How many rental? Oh, shoot. How's that for a...
Yeah, right?
Brings back to 70s. I love that.
What band was that?
That's Led Zeppelin, man. That reminds me when I was like a teenager.
Right.
Let me turn this thing off. I'm sorry for that.
Oh, that's all right.
Whoops. Go to... Okay. Sorry about that.
That's
Little
okay.
Led Zeppelin.
Little Led Zeppelin.
It can't hurt.
I thought it was interesting how you were so open and transparent about your money. I mean, in your homes, you would show us these graphs. Remember, you used to make these graphs, and you would say, okay, this is my home I bought in Utah like so many years ago. And you got homes, you got rentals in Hawaii, and you got a rental in Utah.
I had 4 in Hawaii.
4 rentals in Hawaii. And that's how you kind of invested a lot of your money.
Yeah.
Vegas, Utah.
So you build it up and then you relinquish it and then go take the money and do something else.
And you'd be so excited showing how much you've paid off the mortgage, how much you got left.
Yeah, that my whole life was geared to pay off mortgages. Have zero debt.
Yeah.
Yeah, you want no debt. And a lot of people would argue with me and they say, but you know, if I buy a house and get a big mortgage, I can write off all the interest. And no. Because if you get 25 cents back on the write-off, then you're paying $1 for the mortgage, but you're only getting 25 cents back on the tax return. So you're still out 75 cents.
Yeah.
And people didn't understand that. So the whole thing is to pay off the debt. If there's any interest in your life, it's interest you earn, not interest you pay. Well, so I never liked paying interest.
Yeah, well, once you start talking about interest, you know, Kat and I were in a home in Henderson, Desert Forest, And you started talking about all this interest, that you pay on top of just the value of the home, what you bought the home for. And Kat went home. I think we calculated if we had taken that mortgage and paid it out the 30 years, we would have paid over $300,000.
Pay double. You're paying for two houses.
Yes. It was like over $300,000.
Right.
Not once ever. That was my second house that I had. Oh no, my third house I had owned. First house with Kat. And I had never thought of that, Mark. Never calculated the extra interest. Never thought of it. Never crossed my. Never did. And that moment changed.
It's when the light goes on. Yeah.
It was more than a light. It was like a big old smack in the head, and like,
yeah,
why
you're just
did
making
I
the
not...
banks rich. You got to keep us. We got to keep the money.
Yes.
It's our money.
Yes. And then that's when Kat and I made a plan. We kept our own old vehicle. Remember my old little Ford truck?
Right.
It had like almost 300,000 miles.
Nice.
And I kept that right up until 5 years ago. 5 years ago, I got my very first brand new vehicle, and it was a Jeep Grand Cherokee.
That's what I'm getting. I'm going to get a Gladiator.
Oh, a Gladiator?
On Monday.
Nice.
Sunday.
Nice. Yeah, I love Jeep. But, it's like we decided to keep our vehicles, and we didn't go on vacation, and just every extra dollar we made, we put on that mortgage.
Yep.
And we paid it off. You know, I think after we met you, it took us about 6 years to pay it off.
Plus, you never know what's going to happen in the future. The COVID hits, you got a mortgage, you're screwed.
Yeah.
You know?
And I can't tell you like how good it felt to pay that mortgage when prior to meeting you and you motivating me and telling me we can do it, you just got to be laser focused. You just got to decide you're going to pay off the mortgage, be laser focused, and be frugal. You got to be frugal for a period of time, right? You just got to like maybe sacrifice.
But then it makes you work harder and make more money because you just go on a roll.
I think Kat and I got obsessed watching the mortgage.
Yeah, you can start to see it after. If you don't look at it for 2 years and looking, so you're like, holy crap!
You start to see it.
We just paid off our house.
Yes,
and people don't know if you say you're a married couple and your mortgage is $1,500 a month, you're both working. If you put $1,500 a month, pay the mortgage, and your wife puts $1,500 a month, if she's willing to do that,
right?
If you have the capability, the income, then you pay off the house in 6 years.
Yeah.
So if you both think you're paying off your own house, but you double up on it, 6 years instead of 30.
Right.
You save 24 years of interest. That's like millions of dollars.
Yeah.
It's crazy how if you just run the numbers and run the amortization schedules, how you can just educate yourself to make money, save money.
And you can do it, and you don't need, and I think that's why I really wanted you on here and talk, like you don't have to be rich. You don't have to be wealthy. Like people making a modest income can pay their home off. You can do it.
Well, there's two things I got to dwindle down to now in my 60s here. As long as you retire, when you turn 60, you want to have a house paid for and a Roth IRA maximized.
Right.
If you do those two things, because the Roth IRA is tax-free money.
Right.
And if you have $1 million in your Roth and you have a house that's completely paid for, you're on easy street.
Right.
You have no worries.
Right. And discipline, right? So that's what you kind of coached us is, get that house paid off and start get your Roth IRA
keep
going.
your money for yourself. Why give it away to the
in there?
To the bankers.
And it does take discipline though, because it's easy to go buy a new pair of shoes. It's easy. It feels good, right? People, I think human nature, especially, girls, we like, I like to shop.
Yeah, my wife shops.
Well, so my wife shops too, Mark. And then of course she buys me things. So but I buy you things too, Terry. So it's even, right? But because it feels good. It feels good. You have a bad day or something stressful, go and you go shop. So it does take discipline. You have to be disciplined.
Take care of the big things.
You got to take care of the big things, and you have to be disciplined.
So that's what I did. I always I'll buy a house and pay it off while she buys dresses.
Yeah.
So if I pass away before she does, she gets a house. If she passed away before I do, I get lots of dresses.
You get lots of dresses. Right.
So I'll either resell and get my money
Poshmark
back.
now.
Yeah, I could be a cross-dresser.
Yeah, you can be a cross-dresser. You can start selling them on Poshmark.
I think I'll sell them. Yeah.
Well, that's where Kat shops, on Poshmark and the Real, these sites where it's, nice clothing, but they're used, they're slightly used. And so, I mean, I don't really remember the last time we went out and paid retail. Maybe like my sneakers. I mean, it kind of creeps. I'm not buying used sneakers. I'm just not. That's where I kind of draw the line.
Well, I don't know. I'm starting to have knee problems because of my sneakers. So I got to have good shoes.
Got to have good shoes.
Every 3 months.
Yeah. So between a Roth IRA and a traditional, you lean towards the Roth.
Got to be a Roth.
Got to be a Roth. You want to explain to people why?
If you buy a traditional IRA or a 401k, you're going to get old. You're going to have $1 million, $2 million on up, and you're going to pay tax every time you take a distribution. Now it's taxable. And it also makes your Social Security check taxable. So now you're paying double tax in your retirement because you didn't buy a Roth. If you have a Roth IRA, it's tax-free. And when you get 60, 62, whatever, over 59 and a half, you could start withdrawing your Roth IRA monies tax-free. And then when the Social Security check comes in, it's tax-free because you're not showing any income.
Right. Am I correct that with the Roth, you do pay taxes, but you're paying those taxes while you're earning?
No, it's just after-tax money. You've already paid your taxes. You did your tax return, got your little refund or broke even or paid a little tax.
Okay.
But now you use that money that's already been taxed.
Gotcha.
And you buy your Roth.
Right.
So it's just money like out of your wallet.
Right. So, which makes perfect sense. I mean, when I retire and you no longer have income from your trade or your field coming in, and you start pulling from your IRA, you don't want to have to pay taxes.
It lowers, keeps your whole tax bracket low forever.
Right. So why is there even a traditional then?
It's immediate gratification. So the government tricks us into thinking that if you get, say you're in a 22% tax bracket and you bought 401k, you put $20,000 in your 401k, that's going to save you $4,400 on your tax return this year. So you pay less taxes temporarily. But when you get older, when you really need the money, then they hit you. Now you took that $4,400 of savings 20 years ago. Now you're in your 60s, you take the money out. Now that money is going to be taxed, and it's going to cause all your other monies to be taxed. So you're going to pay high tax bracket in your retirement years when you could have paid zero.
Yeah, right.
So you got to think ahead. You always think in the future, 20 years ahead. Yeah. Don't think about immediately now. I could save $4,400.
And people think like that. Like I think on their W-2s, when they're claiming dependents, they should not be claiming. A lot of people want to claim themselves or claim. I mean, I haven't done a W-2 now.
Yeah, they want to claim head of household for themselves. You need a child to be head of household.
Yeah, but you know what I mean. When you claim.
When you're doing your W-4.
When you're doing your W-4.
Yeah, and you want to get the biggest paycheck possible.
The biggest paycheck possible and the least amount coming out of your check.
I have a woman last night. I looked at her W-2. It had $223,000 with zero taxes taken out. Oh, so she's going to owe at least $50,000 right off the bat this year, and doesn't even know it. She said, "I'm a little concerned I might owe this year." Yeah, $50,000.
Yeah,
yeah.
But might she not be penalized because she wasn't paying?
And then you pay
quarterly?
The penalties and all that stuff.
Yeah, because the one thing you did is I used to just pay at the end of the year. End of the year came. It's like, gather my receipts, add them up myself, do all this crap. Bad mood for.
You just pay as you go. You got to lock up the money, do what you're supposed to do, pay your quarterlies.
You taught me you pay quarterly. You pay, kind of predict what your annual income's going to be. Estimate, doesn't have to be right on, but kind of estimate.
And even overpay a little bit because then you get a refund if you overpaid. That applies to the following year.
Yeah. And do you know how many entrepreneurs or people that are independent contractors like PMU artists, tattoo artists, they don't pay quarterly, Mark. They wait till the end of the year, and then they're hit.
You just got to be organized.
Yeah, you have to be organized. I have that on my cue cards.
To be organized.
About being organized, and it's keeping your receipts right, all your business related receipts.
You got to be responsible to if you're making money, you got to, and you're spending money, you got to be responsible for your expenses too.
Right.
You got to keep those receipts. You can't just go and say, well, I know I spent $20,000 on this machine, but I don't have a receipt.
Got to have a receipt.
You got to keep your receipts because that's required by the law.
Yeah.
And then you don't pay taxes. Like it's so smart to be anal and just keep your receipts, be organized, get some education, and go seek out the people that can help you.
Yeah.
And And then by doing that, you pay the lowest legal tax.
Right.
So the more organized you are, the less taxes you do pay because you're smarter.
I think when I first
organized.
sat with you, I came with a shopping bag full of receipts. You're like, what is that? This is the receipts.
Yeah, I usually ship people. I turn them around and just send them home.
Send them right home.
Yeah, go add those up and come back. Yeah.
It was horrible. But what I do now is I have a filing cabinet and I have folders, January all the way through December. And as I purchase something, I get that receipt and I put it in that monthly folder. If I go out to dinner and it's a business dinner, you taught me to write on the receipt who you went to dinner with.
What was the business purpose?
What was the business what you talked about, who you went to dinner with.
It's true. And now this year you get 100% write-off for meals, 2021 and 2022.
Because it was 50%.
It was 50%, yeah.
Yeah, so it's back up to 100%.
Right, 100% for 2021 and 2022.
All right. Well, you want to go get a steak after this?
Yeah, we could just write it off.
Yeah, I mean, right?
So it doesn't matter, even if you're buying, at least you get to write off 100% of it.
Yeah, well, that's really
which
good
I
to
do
know.
buy a lot.
Yeah,
so it's nice to be able to write it off.
Well, because Kat and I are on the road a lot, before COVID hit. And I remember us being so disappointed that meals were, you can only write off 50% now of the meal. You don't get the 100% off anymore.
Yeah, it makes you not even really want to keep the receipt. It's not that worth a lot. But when you add it up, though,
when you add it up at the end, if you're having $100 meals and you get to claim.
One year I had $37,000 in business meals.
Right.
And I got audited and I won.
You won.
Because it was legit. I spent a lot of money.
Right.
And that's all I spend money on is meals. I'm going out to dinner and going to having fun, and you got to spend the money somewhere.
Kat and I, we get a lot of trainers coming in town. We get, so we do
and
a lot of that.
You become friends once you start buying their meals. So they become your friends. You have a lot of friends.
It's funny how quick they become friends once you start buying their meals. Yeah. But, and it's so monthly. So save your receipts. And with the Amazon, well, I'll tell everybody, I buy a lot of supplies on Amazon, office supplies, whatnot. They don't get, when you get your boxes, there's no receipt in that damn box. So what I had to do is once I place my order and it tells me, I screenshot it on my phone, print it out, and then I write on that what that particular item was for. Was it for the home office? Was it for the studio? Was it, for this or that? So you even have to do that. Like if you shop a lot on Amazon, screenshot your order on your phone, print it out and write on that, because you really don't get receipts with Amazon. They don't send you a receipt in the box.
Yeah, you got to keep your expenses in order.
Yeah,
it's huge.
Yeah, I had a really good friend, I won't mention the name, but went through an audit last year and it was like hell on earth. And that made me, I knew I was buttoned up tight, but it made Kat and I really look, are we saving and capturing every receipt? Are we writing our notes? Are we as organized as we?
It takes months and months. You could get locked in. So you want to win audits.
Like it was like a 9-month audit, and they ask for every. I mean, it was kind of shocking to the person what they asked for. They want a receipt for.
Well, most people don't have it, so they win.
Yeah.
So you concede, but we don't concede. We fight to the end and we win because we have all of our documents and all our logbooks, and you have to do it.
Yeah.
It's just
I agree. I agree. I think what we're talking about is going to help a lot of people. So a lot of people just don't know what to do. They don't know how to get organized. They don't know the first step. They don't know. They've never.
It's what you do in the dark that counts. Zig Ziglar used to say that.
Yeah.
So in the dark, when you're in your dark times, you just go add your receipts instead of doing something. Instead of go gamble.
Yeah.
No more gambling. Start adding your receipts.
Right.
Did I say that? Look in the camera.
I know. And if you have a bigger, I think when you're a certain size company, yes, you can add up your own receipts and do that. But I think once you become a certain size, maybe QuickBooks, I think you even have to maybe go a step further, maybe a bookkeeper, because then it becomes too daunting, right?
Yeah,
because
if you use QuickBooks though, or Quicken, just keep it simple. Like cash money in is income. Just make one income account, and then on the expenses, just type in all your expenses, but don't get into accrual basis and it gets too complicated. So just think money in, money out, cash basis.
So, which I'll segue right to a P&L statement. So every company, no matter how big, how small, no matter how big the independent contractor, or how much money they're making, how little, should have a P&L, right?
You have to for any business at all.
Any business at all.
Yeah.
So for people that don't know what a P&L is, profit and loss statement. So it's a piece of paper, a document that
list your total income,
everything coming in to
then
the
your
company,
expenses and bottom line,
everything going out, and then it gives you this number, what the business profited, and then that's what you pay
your
taxes
net profit.
It's your net profit.
Yeah, and if you don't have expenses and a good organized bookkeeping system, you're going to pay way too much tax because your expenses don't appear as high as they should be.
Right. Exactly. So a lot of people could be missing out on,
they're paying too much tax. No wonder why they're mad. Right. Because they're paying way too much tax.
Right. And people should know, I'm a big believer, people should know their numbers. You just should know your numbers. You should know exactly what your company brings in. And if you have different aspects of your company, right? So Girls Inc., we have like this studio here in Vegas, clients, and I got artists on commit. So there's that kind of part of my company. We have the online store, and then we have the online training academy. So those are like 3 entities all within Girls Inc. that separately generate income. So we have a P&L for each one, which I don't have to go as far as that. We could lump them all together.
Yeah, well, it's easier to keep them in departments, though.
Yeah, so you can see how each department's performing, and you don't want to fund and keep this one running with the profits from that one. So if one department of your business isn't performing and profiting, keeping a separate P&L on each one will let you know that which one's performing, which one's maybe losing money, which aspect of your company is doing good and not so good. And if the one that's not doing so good, maybe you let that part of your company go, right? So numbers, man, and I watch Shark Tank, and I'm going to tell you what, all those entrepreneurs that go on Shark Tank when they don't know their numbers, like Mark Cuban gets so mad, right? They get really upset. Or Mr.
Those
Wonderful.
Guys are good. Those guys are smart.
I'm obsessed with Shark Tank. Yeah, they're all smart. I like all the sharks, and I pick up some really good nuggets, like listening to them like rip apart people, or or giving advice and whatnot. Okay, so okay, what about independent contractor setting up her company or his company for the first time? Let's just say PMURs, LLC, S Corp. Is there another option?
Right. I always like just being an individual LLC for limited liability company. It gives you limited liability protection in case somebody files a frivolous lawsuit. Okay. State of Nevada's behind you with the LLC. But the deductions are the same. The income's the same.
Between an LLC and an S Corp?
And all that stuff. It's just whatever your income is minus your expenses. It's basically the same.
So what's the difference, Mark? What's the defining difference between an LLC and an S Corp? I actually saw this question on Facebook
an LLC
yesterday.
is where you start anyway. Everybody should be an LLC first and foremost.
Okay.
So you're an LLC, and then you're going to choose to be taxed as an individual, a sole proprietorship, or an individual sole proprietorship, an S corporation, or a partnership. Okay. So those are the 3 ways you can be taxed.
Yep.
And not necessarily an S corp. It could be a C corporation, could be a PSC, personal service corporation. There's all kinds of corporations.
Yeah, and it gets all crazy, but that's where a good tax guy.
So basically, it's individual, corporation, or partnership.
Okay. Individual, partnership, or corporation.
Right. So we as little people we're the individuals, or we can choose to be an S corp because there's only one if you're just doing your own little business.
Right.
So then you could choose to be an S corp, and by choosing to be an S corporation, what you're doing is you're paying yourself a salary through your little corporation, and then any monies that comes through that's not on your W-2 doesn't pay self-employment tax.
Okay.
So it saves you on FICA taxes, on Social Security tax.
Yeah.
Which is a concern now, because now with Social Security, they say it could go belly up by 2029.
2029.
8 more years.
8 more years.
I'm going to draw my full Social Security in 4 years, in 2025.
Yeah.
And 4 years after that, they're going to start, from what I'm reading, they're going to start docking, say, 25% off of my full Social Security. So after 4 years of collecting, I'm going to start getting less.
Right.
So that's why I need to have a Roth IRA. I have to build my own retirement on the sly. Don't count on the government to do it for you.
Yeah. You know, my dad was an entrepreneur. He was a plumber, pipe fitter. And I think by the time I was about maybe 15, you know, in high school, he had started his own company and he became a little entrepreneur. And he always said that, Mark, is never, ever rely on that Social Security check, that government, you know, build your retirement, either, you know, get a couple homes paid off, rental income, save. My dad was really blue chip stocks.
Diversify.
Yeah, he's a blue chip stock kind of guy. He's not a big risk guy. He's a conservative investor. He likes doing those, what he calls the blue chip companies. Do you know?
Yeah, this is that 5 things that Robert Keogh, what's his name?
Robert Keogh. Where's he
The guy that did the Rich Dad, Poor Dad.
Oh,
author?
yeah. Okay.
Robert. We'll call him Robert.
Okay.
So he had 5 things at the end of his book, Rich Dad, Poor Dad, on what to invest in.
Okay.
And those are great, but there's actually, I got like 20 of them.
Okay.
You know, so there's lots of things you can invest in.
So what are the 5 that he listed?
Okay, like Susie Orman said, when in doubt and you have cash, keep the cash. Like if you don't know where to go with it, keep it in your bank account.
So cash is still king. I mean, you see a lot of people. I got a couple of friends. Cash is dead. Cash ain't king anymore. I'm like, I don't really believe that.
Well, it's to be diversified, though. You have to have cash.
You got to have
also.
some cash.
And then I got here traditional IRA 401k. If
Yeah.
you want that tax write-off, go for it. Some employers don't offer a 401k Roth, so you got to do the 401k.
Right.
But if they offer a 401k Roth, then definitely do that
Do
one
that, okay.
instead. The Roth IRAs, again, traditional IRAs, Roth IRAs. Stocks, you could do anything with stocks.
Because there's 401ks. Like if you work for a company, like you might get a 401k through a company.
Yeah, or you can have your own company and put your own 401k.
Yeah. Because that's what we do.
That's what you do.
Yeah. And,
so,
and with all our employees now, after I think they've been with us, is it 6 months, Olivia? 1 month?
1 year.
Oh, 1 year. Now our employees, we give them the 401k option. And
Okay,
if they don't take it, we literally like
and see
beat
if you
them.
could offer them a Roth 401k instead.
No, I think it is a Roth. It is a Roth 401k.
Oh, that's perfect.
Yeah. And
beautiful.
Yeah, and we had one not doing it, not taking it. Was it you, Olivia?
No, it was Ashley.
It was Ashley. So, and you know, and we're always on them because we've learned so
No,
much.
you have to.
We were on
You
them. Ashley, you need to get set up. And then she made the mistake and got set up as a traditional. And we're like, no, you got to go back
That's
and change
okay.
it.
Well,
gotta
you
be the
can't go
Roth.
backwards, but you can start now with the Roth.
Yes.
So
yeah.
then you'll have 2 of them.
Yeah.
Yeah, back in 1993, my best friend from college, we were roommates back then. I still haven't had a house. And his girlfriend, he met a beautiful girl from Mexico, didn't speak much English. And now she speaks better English than I do.
Right.
But so she did not put in, she was working at Sam's Town as a cocktail waitress, Sam's Town. And she wouldn't put into her 401k. And I told her, don't ever talk to me again until you sign up. I'll go down and sign up with you if you need help. And then months went by and she still hadn't signed up. And I quit talking to her.
Yeah.
And she was going crazy. Like, what are you doing? Like, talk to me. Yeah. And I said, no, you didn't sign up for your 401k. Now, that was what, 28 years ago?
Yeah.
Now her and her husband, they have well over $1 million in their
See?
401ks.
Do you hear that, Olivia?
Yes, I do.
Right?
Right?
Yeah, time goes by and you
it
don't
does.
see it. It's like a tree. You don't watch a tree grow, but your money tree's growing.
Yeah,
And
exactly.
then when you look out the window 20 years from now, you say, wow, that tree's huge.
And once you start putting in, once it starts leaving your paycheck, and you start putting it, you get used to it. You don't miss the money anymore,
Yeah.
right?
Out of sight, out of mind.
Yeah,
Yeah.
and don't watch it. Like, don't check the account. Like, don't watch it. You know, because like you said, it's like if you keep checking that, it's like watching a tree grow. Boring. You don't think you're getting anywhere. Like when
Right.
we first started paying down the mortgage, felt like we were watching grass grow. Didn't feel we were
Yeah,
getting
it's like,
anywhere.
why are we doing this? We could use that money.
Yeah, we're barely making a dent. But when you look at it at the end of the year, you're like, oh my gosh. And
Especially in Vegas, if you bought a house even probably 10 years ago.
yeah.
Your house now, if you were on a 10 or 15-year mortgage, it's almost paid for, and now it's doubled.
Exactly.
It's beautiful. It's a beautiful thing.
Yeah.
Right?
Yeah. And I just feel if Kat and I can do it, we're, you know, just normal people from small towns, but if we can do it, anybody can do it.
And I was, back in 96, I had 0.
Yeah.
I bought my first house.
So how many homes do you have now?
Oh, I'm down. I'm 63 now, so I've started to relinquish. I'm down to 3.
3 homes.
I have a condo resort in Maui on the beach.
And you'll never get rid of that because you like
No,
to
no,
spend
that's-
months in
that's
Maui.
Maui, yeah.
And you go there for, 4 or 5 months out of the year?
Yeah, I was this year. I've already planned 2 months.
Oh, nice.
And
Okay.
I'm sure I'll go again for another 2 months.
So you get your Maui house. So when you're not there, you rent it out.
That's the long distance getaway rents. The
Yeah.
last month it took in $11,600, and my net bottom line profit for 1 month was $5,600.
See, that's
That's
fantastic.
mine after
Yeah.
taxes.
Yeah.
It's huge. But I built that up, and I built the equity, and I traded it and traded it, and ended up with a beautiful property where I can go swimming in front of my condo in the beautiful saltwater.
Right.
Fresh.
Yeah.
So you see my turtle friends, and it's so beautiful.
Oh, I know it is.
But you got to build it. You don't get it overnight. You got to work hard, and you have to build up your equity.
And I think that's too. A lot of people want instant gratification, and it is a long haul. It's a long haul.
It's a 20-year plan.
It's a 20-year plan.
And that's what I had. I had a 3-year plan and basically a 20-year plan.
Right. Well, when I was 20, in my 20s, you couldn't get me to think beyond Saturday night.
But that's normal.
That's normal. But I think it's when I got in my 30s is when I got out of debt, because when I went into my, I had some debt. I wasn't financially good in my 20s, got out of debt, started saving, met you, and just started getting my shit together. It's like...
No, you did well. You're doing...
Yeah.
Between you and Kat, you kind of bounce off each other, and she does that, and you do that, and she does that, and you do that.
Yeah.
And you worked as a team.
Yeah.
That works out great.
It works out great, especially when, the partners, her and I have been together 17 years. You agree on core, fundamental financial things, right? We both respect money. We want to make sure we have this amount in our savings. We want to, and I think, Mark, too, you have to decide, how do you want to live out of retirement? Do you want to still be able to do an international vacation once a year? Do you want to be able to do this? Do you want to be able to do that? That's the first thing Sarah at Merrill Lynch. How do you want to live your life once you retire and you don't have the business anymore?
Yeah.
And we were like,
you got a good one though. She's great.
Yeah. Yeah. And she kind of calculated every 2 years we want to be able to go to Italy or Europe, and then maybe twice a year do California. We just kind of gave her our thing, what we want to be able to do. And
but you want the short distance getaways too, though.
Yeah, for sure.
So the long distance for me is Maui.
Right.
Short distance is St. George, Utah. I got a beautiful house 42 miles out of Zion.
Right.
And so I get in the car in the morning and drive for 45 minutes, and we're in Zion National Park.
It's beautiful.
And it's only a 90-minute drive from here to that house.
Yeah.
So you want a short distance getaway and you want a long distance getaway.
Right.
And then all the other stuff is fluff.
It's all fluff.
Because as you get older, I see people that are like 70 and they don't want to travel much anymore. Very few people. Sometimes you get grandma who's just a little travel
like
bunny.
Kat's mom. She's 80 or 81, and she's still going to Europe and here and there.
Yeah.
She'll be out here in a couple weeks. Yeah.
They're the lucky ones that still got the energy. But most people I see about 70, they start, or you could have knee problems, or things can go south. But they would go to their short distance getaway more.
Right.
I think that's more along with what I'm going to do.
Yeah.
So,
Vegas will always be your home base. Like, have a home base, right? Like, get a home in your city.
Well, your business is your home base.
Yeah.
Your tax home.
Right.
And then you could write that off. You could write off your house as a business, office and home, do all that stuff, which is great now. But you can't, as an employee, you have to be self-employed.
Right.
So even if you're an employee, you should still start a little side business where you're making money, and then be honest. Just claim your income, write off your expenses, write off your home as an office, and you really don't pay much tax extra.
Yeah.
And you got all that extra money to cash flow.
Right.
So good stuff.
Yeah.
So we're lucky. We're some of the lucky ones.
Yeah, I think we're super lucky, and
but we're poor though too. You're from a poor background, I'm sure.
Yeah, of course. Yeah, I'm from a poor background, and Kat, I wouldn't say poor. Probably my background's not poor, although I've had some family members, of course.
But when you were out of
probably
high
be
school
poor.
and in college, you were on
Oh, I
your
was
own.
broke. I was so broke. And
Yeah.
I actually lived in my car for about 7 days.
There you go.
Here in Vegas. Back
Yeah.
in the day, I did. I ended up homeless for 7 nights.
Mm-hmm.
You know what I did? I had about $400 left to my name, and I bought a gym membership. Do you remember
Or just
Family?
to take a shower.
Family Fitness down on Valley View in DI. Do you remember that gym? It was called Family Fitness. They were everywhere back then. And it was right on the corner of Valley View and Desert Inn.
Mm-hmm.
And I bought a gym membership so I could go work out every day, take a shower. And they had a counter, like a little cafe. And you could go in every morning, get a muffin, a bagel, coffee, juice, a shake. And they had the because everybody read the newspaper back then. And they
Right.
had the newspapers.
Right.
And that's
I do remember that. now.
yeah, I would go drive I had a $800 little Renault that barely ran, and I would drive it to Angel Park Golf Course, and I would sleep there. And then I'd go down in the morning to Family Fitness, work out, get a little breakfast, read the wanted ads, and thank God it was only 7 nights, and nothing happened to me. I got myself out of that mess.
Good.
But I'll never forget it. I kind of look back on it now as kind of
It's great. Yeah, I
it's
did the
great,
same thing.
yeah.
I drove a Buick Delta 88.
Buick
it was
Delta.
a huge car made in the 80s, right? 70s. It's
yeah.
from the 70s.
Do they even still
And-
make Buicks anymore? Is Buick still a car?
I don't even know, but this was a huge, like a tank. And so
Yeah.
I bought it for $600 when I was in LA. I was 20, I was 20, and drove it to Las Vegas with $40 for gas and $40 for me.
Right.
And as soon as I got to Vegas, I slept in the Delta 88. It was like a tank, it was very comfortable. It was like a double bed.
A double bed, yeah.
And then went to like the Denny's type place to get a job. And no, first I went to Safeway, got a job collecting shopping carts and bagging groceries. And then the next day I went into a Denny's type place and got a little job in a little restaurant. And within 3 days I went to get an apartment. And I told the guy I have like $60. The rent was like $220 back then. Like
Yeah.
40 years ago, well over
Right.
40 years ago. And he says, well, and I said, I'll give you the rest of the money by the end of the week. And he let me do it. So he let me rent an apartment with the money down. And then that's how I got started.
Yeah, there you
So
go.
I came here broke too. So
Yeah.
that's
yeah.
why we get along. We're from the same roots.
Yeah,
we slept in our cars.
I came here so broke. I was kind of running away from
It builds your
it does,
self-esteem.
Yeah, and I was running at that time in my life. I was I just came out as gay to my family back in Maine, and I, even though they were okay with it, I think I just had my own crap with it, and ran out here and with a girlfriend from Maine, and it's like it just didn't go well, and she left me. It's like I had nothing. I knew no one. Yeah, and but it's like, and back then when it was happening, it was horrible. Of course, I was probably crying every night. I remember being terribly scared, feeling terribly lonely, and but it's just you look back on it, and I think it definitely built some character for sure. And you realize when you're in those situations, you realize what you're made of, out of, and what you're capable of. 'Cause
Well, I've been on my hands and knees praying to God, like, please give me direction.
Yeah.
Because I had nothing.
Right. Yeah.
And it worked.
Yeah.
So a little prayer once in a while
Yeah.
doesn't hurt.
Of course not. A little prayer, positive affirmations, positive thoughts, a
Yep.
good outlook on things.
Yeah,
Not
just
being
be positive.
angry. And I think not
Yeah.
being angry. I see a lot of people angry right now and carrying angst and with the way of the world and
Or
whatnot.
you look at it as a challenge too.
Yeah. Look at it as a
I'm
challenge.
going to do this. Yeah.
It's kind of like sport, right? If you look at like, making money, saving, kind of a little bit like
It is. It's
like,
exciting.
It's exciting. It's like a sport. It's
Yeah.
challenging. Yeah.
I used to jump out of bed and just, I quit drinking. I wasn't an alcoholic, but I drank with my buddies, drank a lot, spent all my money and given it to the cocktail waitresses and the bartenders and the gambling machines. This
Right.
is one point in my life.
Right.
And then I just quit drinking just because I got tired of spending all my money. And that's when I started buying houses and nice cars. And
Yeah.
they changed my life, but it was all because of the decision to quit drinking and going to a certain place that was sucking up all my money.
Right.
So
Right.
now the money belonged to me, and now I can start making money.
Yeah, put it exactly.
So
Make
it's
your
your
money, make money.
Yeah, it's
right.
what you decide to do, like
Yeah.
what things you do in the dark.
Right.
Right.
Well, I think a lot of people are, they're so afraid to invest. They leave it in a regular, like a Chase bank account, a regular bank account, earning no interest. I mean, so it's really important that your money makes money. You got to put your money in places where you're going to get some,
That's the other-
ROI, some
let me
return
read the
on
rest of this
investment.
list, though.
Okay, read that list.
Other one was first trust deeds, annuities, life insurance.
Life insurance.
Mostly I have insurance on me for others, but foreign currencies, you can invest in those. It worked for a while. The dollars was even with the euro, and now the euro's taken back up. Mm-hmm. So you could have caught the euro at a good time and made money buying euros.
Right.
Let's see, what else is there? Silver and gold.
Yeah.
Just got to find a good place to hide it.
Yeah.
Right.
I got a good friend that buys a lot of gold.
I thought you were going to say, I got a good place in my
I
backyard.
got a good coffee can in the backyard.
Commodities, tax-exempt securities, which is great because it's tax-free
Right.
when you get older. Laddered bonds, houses, first home, second home,
Yep.
rental houses.
Yep.
Those are all great investments. Business, build your own business, invest in your own business. Union pension, I also hopped tables for many years while I was doing all this stuff, and got a union pension, 21 years in the union, as well as doing my business.
Mm-hmm.
So we're all hustlers here. Social Security you're going to get for now. Don't rely too much on it. Low-income housing tax credit. This is for people that have too much money. Royalties on oil and gas investments. Low-income housing tax credits, inheritance, if you're lucky.
Right.
So look for a rich uncle that you haven't called in a while.
Right.
Start calling that rich uncle. Opportunity zones. Those are the new tax law. So there's lots of places to invest your money to make money.
Yeah.
So,
Yeah. Key.
Good stuff. Yeah.
So, all right, we're gonna wrap it up.
Oh, good.
Did you have fun?
Oh, yeah.
Yeah, I had a ball.
I'm still a little nervous, though.
You are? I know. You're still tapping your toes. I hear it.
I'm not used to being on TV, you know.
No, I know, right?
Right?
You did great, though.
That's all
knew.
good.
I told Livia, I go, everybody's going to love him because he's got a great smile. He's super interesting. He's great.
Oh, good.
Yeah, they're going to love listening to you.
Well,
It's gonna
I
be
love
great.
you, too. It's
yeah.
all good.
So will you come back?
Oh, yeah, I'd love
maybe-
to.
so-
I was very flattered you asked me to do this.
Yeah, I want to get interesting people on here and talk
Mm-hmm.
about interesting things. I want to educate people, and I
Motivate.
want to motivate people and get people out of this place where you don't have to come from. You don't have to have a lot of money. You don't have to
It's fun building it.
in order
You
to
know?
build it and have a nice little pot.
Actually,
there
it's
for you
better when you're broken on your own and you're building stuff.
Yeah.
Because then when you get too much money, now everybody wants to take it.
Yeah.
So now you're
right?
on the defense.
Now all the third cousins, the aunts come
They
out.
all want to steal
Yeah.
your money. So it's
Yeah.
better when you're making money. Nobody knows you have money.
Right.
And you have freedom because now you have some extra money.
Right.
So
Yeah.
that's the whole goal, is to have financial freedom, financial
Right.
independence
Yeah.
without anyone knowing it.
Right.
You know.
Yeah.
So now that everybody caught on, I'm like, oh shit, they're all like, can I borrow some money?
Yeah. Well, when this drops, I'll ask the listeners to drop in the comments maybe some questions they want us, or some things they want us to address.
that's good.
The next time you come on, and I'll put it out on my Facebook.
Are we still on?
Yeah, we're still on.
Okay.
All right. So yeah, behave. Just 2 more minutes. Just
No, I don't have a watch. I'm
All right. Well, thank you, Mark.
I just
for
want to
coming.
grab a beer. Yeah, I'm ready for a beer.
Well, you earned one. You did great. You did great. It was awesome seeing you. So thanks for coming,
good.
and we'll definitely have you back.
And I noticed after an hour you got beautiful eyes.
Oh, it took you a whole goddamn hour to notice.
No, they're shining. Yeah.
Well, because we're both a little giddy with each other right now, right? I
Yeah.
know. Well, we've missed each other.
Good stuff.
I know it. All right, you guys. Thank you for joining me and my friend Mark for another episode of Tatter of Fact. Should I say happy tattooing, Olivia, or I say happy building your nest egg? That's
you
what I'll
go.
leave you with this week. Happy building your nest egg. All right. See you all next time. Bye.